Hello, everybody. Welcome to the newly retitled Mind Print Hash. It's the second week of 2026, and I'm your host, Cameron Otsuka, and you've got Matt Dines here as well, as always. Um, just to sit on the name change briefly here, Matt came up with this. Maybe Matt, I'm just gonna throw it over to you really quick. Do you want to maybe explain the reasoning behind the name, Mind Print Hash? Why you kind of came up with this retitle?
Yeah, so yeah, great. Thanks, Cameron. Same product, new label. Um, but yeah, so we're just going to go under this banner title now. Key thing here, we are trying to explain in terms of big picture monetary history what's playing out in this, really critical kind of window of history, in our opinion, as far as all of the transition we're living through, geopolitical, monetary, et cetera. So um, kind of the basic backdrop, money is kind of an important input in this process. It always has been, if you're looking at history as your guide. And over the course of history, we explain things in terms of, you know, deep dives and, just pulling things out of the textbooks that maybe have been forgotten on the bookshelf a lot to, get our bearings through this volatile age. But if you look back in history, the three ways that kind of monetary networks secure themselves, they really fall under, three mechanisms. Number one is mining, right? You mine gold, silver, or a like a resource commodity. Usually it's precious metals to coin a currency, to coin a commodity money, and that provides basically the unit of stability for economic interactions to take place and then for societies to build up from that. Number two would be printing. We can go back in history here, basically just banknotes, paper claims that, for most cases in history have been used as like a redeemable, bearer certificate for those, metals themselves. So they've replaced, but also, you see the European perspective, accounting out of Venice, Florence, et cetera, in the Italian Renaissance, really where this proliferated, but accounting ledgers, like monitoring um, counterparty liabilities, between interacting balance sheets within an economy. And you don't necessarily need a physical instrument or a manifestation of value like metal coinage
Coin, yeah.
or paper notes like to redeem against those coinage. You just record them on accounting ledgers. You trust centralized parties or banks, et cetera, to keep track of the ledger, and then all the economic participants build around that, right? And up until, let's say, 2008, that's really all we had, those two tools. But in 2008, we get the arrival of Bitcoin, which secures its own accounting ledger through the hashing algorithm, which is really um, a manifestation of energy and compute resources to secure an accounting ledger. So those three things, mining, printing, hashing, those form the basis of how a society um, basically forms like a monetary network so that economic participants can interact with each other, do business, engage in trade of real goods and services, and build up back to stability. So what we're seeing, and my opinion, my framework, Cameron, hopefully you agree with me, but I think what we're seeing right now, starting in, you could say at least 2008, like the breakdown of the financial crisis was the start of the clock of the old system, basically just admitting, it died. It was on its last steps. It was just, taking its last breath for survival as we progress, into the future, the unknown. And we've been trying to find that stability ever since. So we're almost 2 decades into this process. But in our view, what we're looking for is these three things: mining, printing, hashing to come together as this kind of global order, this interaction between regional spheres, between economies, even down to the micro level, how families, households, individuals, choose to save and interact with other economic counterparties and coordinate trade, all of that, how this plays out. that's really how we're trying to kind of view all of these developments, all of these headlines in this age of turmoil.
Yeah,
So yeah, mine print hash. That's what we're going to call ourselves.
yeah. And with that, welcome to the new Mind Print Hash. Well, great. Let's go ahead and jump right into the new year. Right, we started off with a bang, literally and figuratively. Three topics for this week. Number one, Venezuela. There's a few different aspects of that both Matt and I will get into. Number two, Dow Theory. I think this one, Matt's going to really go through his explanation of what we're seeing in markets today, and then finally a few things that we're going to lead off into to next week to pay attention to. Um, so with that, let's go ahead and just talk first about what happened in Venezuela. Um, for those who do not know, over the weekend, me personally, I woke up on Saturday to my my phone just blowing up. People ask me all these different questions about what are you seeing the news, what is going on. But the United States struck Venezuela, specifically in the Caracas area, and was able to successfully extract Maduro back to the United States, and apparently Maduro's wife as well, to face our judicial system. So, before I turn it over to Matt to kind of talk about what this means from a broader geopolitical perspective, I think for me, a couple things that stuck out were from the technological side. Number one, if you have not heard, the Caracas had a complete blackout. So the United States was able to cut power to the entire region. Uh, so if you're looking into that, you're looking into these industrial power controls. You're looking into how they're actually securing their power networks. Um, I want to say mid-December, there's a few cybersecurity briefings saying that there was a large-scale attack that happened to some Latin American energy facilities. For me, here at Build, I do also oversee our cybersecurity, so that's interesting to look at. And I think that's a breadcrumb along the way to see what was going on here. Secondarily, uh, the Cloudflare, which is a network security and kind of cloud infrastructure company, they also published a piece a couple days ago about noticing what are called BGP inconsistencies. So that's how your ISP, your internet provider, connects to other internet providers. This was all kind of in that Venezuela area. So again, you're seeing the United States utilizing tech and cyber espionage, cyber attacks to actually help with this extraction. And then finally, I think, which is the broader, it kind of ties into the geopolitical piece, is that Venezuela and China share a lot of technology, right? So China provides Venezuela with different um, uh, defense systems, missile systems, etc. There are reports that some of those maybe didn't work or were able to be jammed. So a lot to look at from that perspective. So again, we're not trying to make this a military and tech podcast, but definitely there's some things that are advancing on that front that I think are important to call out because it does kind of tie into our broader themes around AI, and you're hearing a lot with defense companies, Trump's kind of directives to those CEOs, etc. So that's enough for me. I want to turn it over to Matt here. Matt, you're able to see kind of the economic take here. So maybe walk me through, what you're seeing and why Venezuela is maybe a more important piece of the picture than a lot of people are realizing.
Yep. Thanks, Cameron. That's a good summary of the how. And I think one of the things one of my takeaways out of this weekend was just how, I guess what I'd say, mechanically precise this action was. If you think about, these things, there's a million ways they can go wrong, Black Hawk Down type of disasters. And if you just want to talk about competence in terms of execution, this was like flawless. I know there's a lot of, from an outside observer standpoint, I know there's a lot of, you know, knee-jerk reactions. Hey, was this regime change? All of that stuff. I'll give my perspective in a second. But in terms of like just the operation itself, this reflects like months of prep work to come in and just get this coordinated action executed across, I guess, the Department of War and Department of State to realize this outcome. Now, I think there's the immediate knee-jerk reaction in the media sphere, you know, views this just like any other kind of regime change operation of the U.S. military, for example, Iraq, Afghanistan, etc., or say like an intelligence-directed regime change operation, something like the Bay of Pigs, going after
Yep.
Fidel Castro, trying to flip, regime change, etc., like some type of economic activity like that. What I would view this as, like, just take it, 2025 framework. Remember when we saw the Argentina currency swap in October? It was really a huge catalyst as far as moving the players to their next move. Unfreezing everybody from a just dead standstill as terms of how this geopolitical chess game is going to progress. That currency swap, or the U.S. basically came in with or U.S. Treasury came in with the liquidity lifeboat for fully collateralized swap agreements, basically allowing the Malay administration and regime the backing it needed to go into elections with momentum and come away with a larger congressional majority behind the Liberty Advances, political movement that's been basically just gaining traction for the last 4 or 5 years. If you think about what did that net out to, just the outcome wise, what that was bringing in Argentina into the U.S.-led new Western Hemisphere orbit. Now take that same framework, apply it to this build up towards what's going on in Venezuela. What materialized in terms of the climax Friday night, Saturday morning with the Maduro extraction. What we're seeing here, I don't view this as necessarily a total regime change per se, same way that Argentina wasn't a regime change. What's actually going on here is a very carefully executed, I guess, implementation of now Venezuela into that Western Hemisphere orbit, which is led or being led by Washington, D.C., and I would say the capital faction in New York City. Given what's going on, the Mamdani administration coming to power in New York on over the weekend as well. I don't know that New York City is on the same page as Washington, D.C. anymore, but that one is left to play out in the future. But that's how I view this Venezuela operation. This is, I would say, the climax, at least the end of the beginning, but there's a whole lot that's going to go on from here as these core trends continue to develop. So that's kind of how I view this. Start with this, it's a dollar story, right? And also a control and flow of resource commodities story as well. With this play, all of the resource economies, let's say, what's been heavily talked about, Venezuela's oil reserves, the heavy crude, all of that, not just the energy resources, but also the metals, the silver, et cetera. Those now come under control of that Western Hemisphere financial orbit, right? So who's the on the other side of that, right? If there's a winner, there has to be a loser. Well, you'd be looking to the other regional spheres of influence who had roles in the area. And basically, that was everybody, right? EU or Europe, UK, Russia, China. This, like Venezuela, for at least the last 20 years, ever since the Hugo Chavez administration or leadership came into power, going through Maduro, I mean, it's basically just been a hornet's nest for all of these regional powers, just kind of duking it out and running everything from human trafficking operations, drug exports, resource exports, all of that was just running out of Venezuela. Basically, the way I view this is the Western Hemisphere essentially coordinating together, Northern and North America, South America, and basically just saying, like, get out, foreign influence. Um, doesn't necessarily mean that we're hostile to those foreign regional spheres. It just means that we're not going to sit by. When I say we here, America, and I think what this viewpoint stands for, the Donroe Doctrine, if you will. It's like the rest of us, the whole Western Hemisphere, we're not going to just sit back and let ourselves be basically infiltrated and run through by foreign influence anymore. So that's what's going on. That's the way I interpret this. Now we get into the financial implications as well as what this means for the real economy. And I think this is where the analysis gets really interesting. So observation here, you see this in the Kobayashi letter. It's kind of a new media, let's say a social media financial reporting outlet. Posted here the Caracas Stock Exchange chart, and you see this on the announcement on Friday night, Saturday morning of what took place. Just like a rip. What is that? Like we're looking at basically from 1500 to 2600. We're talking like a 40% gain, like just in a very compressed time frame. This is like if you zoom out and look at the charts of the Venezuelan stock market during the hyperinflation itself, that's really gone haywire since the early 2010s, right? Maduro's entire tenure, if you will. Um, the whole thing just goes exponential. It's a melt up in itself, but like Saturday night or Saturday, like on this news, it's a melt up on top of a melt up. What's going on here? Keep in mind, like the index on the y-axis, it's not dollars, right? This is local currency. This is the bolivar, which just keeps, they add on a zero and essentially you do a reverse stock split to make your units not go into the quadrillions, right? Which is where these hyperinflations go. What this reflects is that those or not dollars, but that local currency, the holders of that cash or that money, if you will, it is trying to flee into an asset where it can preserve its purchasing power. So number one place this would go, you look for equities, real property, you could say Bitcoin, et cetera. So you have seen a lift. You can go look at the Bitcoin chart since Jan 1. This is capital or savings trying to flee and find solid ground because what this is telling you is the bolivar is not long for this world. So that old world, whatever the regime was, everything going on since the 2010s in terms of trying to patch together a financial system mainly run by foreign powers or under the influence of foreign influence or foreign powers. That game is over, right? So this is basically that capital looking for the lifeboats. Um,
Yeah.
so what's going to go on here, right? So key part of this, I mean, essentially view this story. Venezuela joins Argentina, and then if you look up the western coast of the elections over the last, let's say, 12 to 18 months, you've seen kind of aligned governments winning election. Chile, I want to say Peru, Ecuador, they've flipped towards presidencies that are favorable to this viewpoint, which is really being led by figures like Trump, Hegseth, Rubio, etc. They're on board. Venezuela joins the club here. Doesn't necessarily come through a popular election like Argentina or those others I mentioned, because Venezuela is fundamentally like a government or a a failed state that's not to the same level of social order that those others in South America have been. But that's the way I view this story, the consolidation into the Western Hemisphere. So in terms of goods, what's going to happen here and trade? You've seen at the press conference on Saturday afternoon, Donald Trump made the statement that Venezuela is going to export, approximately like oil of value, current market prices, basically $2.8 billion to U.S. refineries, which are located around the Gulf Coast, to process the heavy crude. Um,
I,
See
I thought the
the
important
little
piece here was
Chiron.
you actually called out Trafigura here. Maybe could you
Exactly.
explain
Yeah.
why did that kind of pop out to you?
Yeah. So in the last few weeks episode, we talked about the commodity trading houses, right? And most of these are under the domicile or registration, like whose flag are they flying essentially in shipping terms, right? And these are the firms that move um, the raw commodity, right? The actual hard things. They put them in boats and they move them from production or source of supply to their endpoint port or market for ultimate demand, right? So that's what these commodity trading houses do. You see in the Chiron here, energy trade a Trafigura to talk with U.S. over Venezuelan oil. This is a key tell. This is like this is where the rubber meets the road here. Who's going to get the resources? Where is it going to go? Trafigura, they're a Swiss registered player, but they're domiciled out of Singapore. So really, a key element of this is exports or access for the Asian economy or sphere of influence, which is fast growing, right? In the post World War II, time frame needs access to these, to this heavy crude for fuels, et cetera. It also needs the metal access, silver. Look at the
Right.
charts, everything going on in silver. We won't get into it here. We talked about it 2 weeks ago on our last episode of 2025, I believe. That's what's going on here. So these commodity trading houses, um, will be heavily involved in this process here of who is going to have access of these resource commodities, which are vital for everybody, right? But what's crystal clear here in this with this action on Saturday morning with Maduro, U.S. is in control of the commodities, which also means they're under like the financial control more explicitly. So I think that's a key tell here. Venezuela is now going to be a trade partner of the U.S. under this new kind of framework or onboarding into the economic coalition. And on the other side of that, those $2.8 billion worth of oil exports to the United States, and this Trump tweet from this is yesterday.
Yep.
Um, he's announcing Venezuela is going to be purchasing only American-made products with those deals. So number one, you got to be able to enforce it. Those dollars have to only go towards American produced products. So what does that mean? Agricultural, medicines, medical devices, electrical equipment, energy equipment. Um, things like capital goods, things like that. So it's really setting up Venezuela or integrating Venezuela into the kind of Gulf of America and Caribbean Sea trading bloc, which has been kind of fractured, right? They've operated as two separate things for a while, right? I don't know when you go, you could say Cuba would have been a big split.
Right.
Um, but they've never actually been integrated and they were basically decoupled for all of the 2010s. Those two things are reintegrating now, that nexus between the North America and South America. So that's what's going on. How do you tie it all together? This is where you start rolling back the tape. What were all the key headlines we saw in 2024, or sorry, 2025? We just did a year change. Apologies for this. It's hard to get it right until we get used to the fact that we're in 2026. It takes a while. We're still only on 8 days into 2026, so bear with me. Remember the key story from June in 2025, the Genius Act, right? The U.S. now has a regulatory standard, how these dollar stablecoins are going to work, issuance guidelines, all of that. Do not be surprised. Actually, say expect would be another way to say it. That all of these flows, the payment for that trade of goods, oil exports going to the U.S. How do you enforce that those dollars are going towards U.S. manufactured goods or produced goods? This is where the Genius Act stablecoins come in, right? It's almost too good to be true. Um, and then those stable coins, what are they holding? What are they backed by on the back end? They have to be backed one for one with US Treasury
Treasuries.
bills.
Yep.
So now, as you go into 2026, you've got two sources that we know of who are going to support the US federal government deficits from a short term bills issuance standpoint. Number one, you've got the Fed, which is flipped over from QE to QT. You've even got RMPs, reserve management purchases going into effect. But now, what you look at, the more trade, takes place between U.S. and Venezuela, both directions. You could probably say this for the rest of South America too, but the more that trend ramps up, the more stablecoin issuance you're going to see, which is basically just, you could view this as you're bypassing um, the offshore dollar banks, so European banks, HSBC, Standard Chartered, BNP Paribas, et cetera, Banco Santander. You go down to South America; those are the banks you'll see a lot of, at the airports. You won't necessarily see a lot of, the U.S. Household name banks, JP Morgan, Wells Fargo, Citi, et cetera. They're only just starting, I think, to build up their market share in South America. But how they do it, basically this Genius Act stablecoins gives the U.S. banking and financial system a new tool to bypass the legacy euro dollar or offshore dollar system. And basically, what that is it's a territory or it's a acquisition, right? It's a market acquisition of old colonial powers or foreign banks from the U.S. perspective, being ceded to the U.S. banking system and the Western Hemisphere's own players. So keep watching this. How do you know whether this trend is continuing to take off? Look at the market caps, right? So you got Tether, which is your market leader. Right now, it's almost $190 billion of issuance. Tether is not a Genius Act compliant stablecoin right now. It has time to come into regulatory compliance to fully reserve its stablecoin dollar denominated liabilities with T-bills, but it's not doing that quite yet, according to its accounting statements it releases on a monthly basis
And it'll be a separate coin, most
from
likely,
BDO.
too. Yep.
Could be, yeah. Keep watching, but you should expect this trend to keep going up and to the right if what we're talking about is actually playing out. And the other one, USDC under Circle, which IPO'd in 2025 last summer as well, after Genius, right about with Genius, in June. You see that one, the issuance moving up into the right as well. It's about $75 billion right now. So if you look from 2024 to 2025, the rate of growth here for Circle, from north of, let's say, 25 billion dollar market cap range, at the bottom at the beginning of 2024, it's it's basically tripled, right, to $75 billion. So if this trend is playing out, like, how will you know this economic integration is moving smoothly from here, let's say, and the integration, the merger and acquisition is going well? You would watch for these numbers to keep going up and to the right, would be how I would look at this. All right, so that's that. That's Venezuela. I think that's where we'll leave it for right now, but it's not the end of that story. I'd say it's really just the climax of the first phase, and now we're on to the real story, which is the economic integration of North and South America as trading partners, which I don't think we've ever fully had, right, in history from colonial times. So this is new territory, I think, from the historical records standpoint. All right, next, let's get into Dow theory and what we're going to talk about here. But first and foremost, like, we start with what is the state actually of the U.S. economy, right? If you doom scroll, it's end of the world is happening right now. We're all crashing. It's a dumpster fire, whatever. All right, the data is not actually leading to that, doom scrolling, doom porn type of conclusion. I think if you go back, you look at the GDP prints, the economic data, what they're actually saying is telling a totally different story. So we'll start with some observations. So U.S. third quarter productivity rises at its fastest pace in 2 years, right? 2 years is not a long time. Key thing here, productivity, the measurement is going up, right? First, I want to clarify, what is this productivity thing? We tend to think about it as, is it efficiency in the economy? Are we getting more out of less? Kind of, right? So if you think about what is this productivity metric, it's actually a plug in an economic model Basically, you think of these as like solo growth models, stuff like that for economic accounting at like a nation state level. What these models are actually tracking, they take GDP as an output and they take the inputs. The inputs assume that to get output, you need two things. You need capital inputs. We don't mean capital in terms of financial assets in this case. We mean the real capital stock, property, property, plant, and equipment like machines. You could maybe say IP software in this modern world, but it's the things that labor uses as like tools to create a finished output. And then your other input would be labor itself, just human hours. You put human hours in, you put the capital stock, those things work together over time, they produce output. So you're trying to measure those three things. You see how your economy is doing. What the productivity metric is, it's called total factor productivity or TFP in these models. It's basically the residual, right? It's the unexplained portion that doesn't fit the curves, if you will. It's the piece left over. And what you're assuming in there, if you look at economic writings, you're saying, what is it? It's technology over time, it's productivity, it's efficiency. But really what it is, it's what your model can't explain
I was
is
gonna
what
say
it amounts
the
to at
error
the end.
rate, the error, yeah.
Yeah. So the other thing going on here, and you'll only really grasp this if you recognize, that this productivity metric, it's not what you think it is. It is over the long run due to things like technology, et cetera, but it's also capturing something else in that residual. And in our opinion, this goes back to mine print hash. Money is changing, economic coordination is changing, regional power blocks are changing. All of those shifts are at play, right? And so what you're seeing here, um, this activity we've been seeing since Liberation Day. Why does he call it that? This is going to hopefully make some sense. Liberation Day is basically sovereignty and control, both from the political standpoint, but also the financial standpoint over the resources and the economy. And it goes all the way down to the base level. It goes down to the root commodities, oil, silver, gold, etc. That's what's going on. This realignment where now, all right, say American manufacturing is now on, it's not even a level playing field. It's an unfair playing field if you think about it. The tariffs, we talked about, the Trump tariffs, Liberation Day, what did it actually mean? It's an offshore, onshore dollar story, right? What it basically puts up is it's building a levy, it's building what you call it, like a restraint of trade from foreign manufacturings being able to sell into the domestic U.S. economy and its demand, and basically export goods into the U.S. and import dollars into foreign money center just locations. Tokyo, Hong Kong, Singapore, London, it's at Caymans, all of those, right? So it's a dollar story, right? Everything going on, tariffs, this integration, this roll up you're seeing with Argentina, Venezuela, even Japan. We talked about that one in September, October. Um, this change, going on at the base layer, is fundamentally shifting, basically the industrial footprint or just output away from rest of world and towards the US, and you could say the Western Hemisphere more broadly, right? That is what I'm looking for in this framework. Now, you say, Matt, well, that's a great idea. What would you be looking for in terms of market signals to confirm whether this is happening, right? And we can just, stare at our navels and argue in the face, or we can look at the real metrics. And same thing. So we talk about here. Um, the U.S. trade gap has shrunk basically back to GFC levels on the effect of these tariffs, right? You put up the wall, it's going to cost you extra dollars now in terms of a cost with these tariffs if you want to, if you're a non-U.S. manufacturer, right? and you want to export into the U.S. economy to run your business, right? You're now at an unlevel playing field. The demand when the American consumer now shows up at Walmart or wherever to spend their money and acquire the good or service they want, the tariff adds an extra cost, to a foreign made
Right.
good item, whatever. Um, and without even having to pick up the trinket and see, oh, made in China, or check if it's made in the US, it doesn't matter. It's reflected in price, right? Because everything has to earn its profit or return its cost of capital. Um, so this effect of just naturally flowing through the market, and that's why you're seeing the trade gap shrink, in my opinion. Now, as the U.S. Starts to integrate, with the rest of the Western Hemisphere countries, they trade with each other. They keep the financial flows within their orbit. The strongest currency in the Western Hemisphere is the dollar. We don't need to talk about dollar versus euro, dollar versus yen, dollar yuan, etc. Bar none, there is nothing else in the Western Hemisphere to compete with the dollar. This new block, they're going to organize around the dollar. More precisely, the stablecoin version of the dollar is just based on kind of prior history, transitions, etc. We have the new thing. This is probably a good signal. This is what these economic parties are going to build their trade with each other around, at least for this time, right? They're going to involve gold for settlement. They're going to involve Bitcoin, but they're going to denominate, at least for the time being, while the liquidity is in the dollar itself. They're going to have to continue to utilize the dollar, right? Um, all right. So now we get into what would you look for in terms of market signals for this happening, besides the trade deficit, shrinkage, the productivity, the GDP growth itself, which came in at, I want to say, 4.3 real, like 8 nominal. You're like, whoa, what's happening? Um, all right. Everything we're talking about is happening, right? So if you're looking for a stock chart, you're looking for the stock market, the equity market should tell you what's going on in the real economy. And I want to go back to old world US, basically just equity market frameworks before we became a service economy, right? I'll go back to Dow theory, right? Charles Dow was basically the progenitor of what became today the Wall Street Journal. I don't think it was called that at the time, but his the next guy he handed it to, William Peter Hamilton, formalized this little publication as the Wall Street Journal, which kind of stands as the paper of record for the businessman, right? At least in the Western Hemisphere, or the English speaking world at this point, centered out of New York. So two things you're looking for if you're looking to confirm whether the U.S., the real economy, which I'd say is a goods economy primarily, not necessarily a service economy, to see if that goods economy is in a bull or a bear market. So Dow invented, everybody's familiar with the Dow Jones Industrial Average. He also had a Dow Jones Transportation Average, which was, back in his day, it was just the railroads, right? Because you had the railroads first, then came the automobile, then came the interstate highway system. This was the 1950s. Then came the semi-trucking and transportation industry. So it started as the railroad index. It's become the transportation index. All right. I'm not going to use the Dow Jones Industrial Average, or just call it the Dow, as what most people call it as, because over time, since Charles Dow first published it, it's been kind of watered down with non-industrial, like manufacturers. So if you look at the membership, like you've got Microsoft, you've got Goldman Sachs as the number one weighting. So it's not tracking the same thing. I am going to use the XLI ETF, the State Street Industrials, just exchange traded fund. That really, the membership represents manufacturing amongst like the U.S. flagship companies. So what you're looking for here, to say the goods economy is in a bull market, what do you expect? You need to see a breakout from the industrials themselves, right? Because they're manufacturing more units, they're spinning up production. all of that. But how do you know it's real, right? How do you know the managers aren't just getting overeager? They're not just juicing the numbers, all of that stuff. What you need to look for confirmation in the Dow theory is simultaneous follow through activity from the transportation index members or the transportation index itself. So you need to see bullish activity, higher highs, breakouts, etc., in both the industrials and the transportation sector to confirm the overall market trend. Well, let's get into those. All right, so here is the XLI equity index. This is going back 5 years. If you look back from basically 2021 up until January 2024, we're just trading in a flat range. All of this stuff you heard about Inflation Reduction Act, removing semiconductor, get the TSMC Arizona plant going, all of this stuff going on from the Biden administration. The market was telling you none of that policy was actually going to work for getting the U.S. goods economy out of its basically stagnant state that it's been in under the entire framework post I'd say at least 1971, like the new framework, the new monetary framework that we've been operating on for 50 years before what we've gotten into now. But 3 years of nothing, and then you get into 2024 and you start to see the breakout, right, as we head into the election. Now, after the election day euphoria, we actually got a sell the news event. Ultimately, we draw down in Q1. We bottom on Liberation Day. And since then, it's been up and to the right. We went through a consolidation at the end of summer 2025. If you look at the activity, though, since really it starts in October, that Argentina announcement is really the inflection point, in my opinion. And then everything we saw, China or the CCP issues its proclamation. It's going to restrict exports of rare earths. Everybody just got back to the table. Things got heated. But ever since that moment, all of the steps taken between all of the key players around the game board, industrials have been on a tear. They're breaking out new all-time highs. What companies are these? This is names like General Electric or GE Vernova, since they've split into two units. Caterpillar, Raytheon would be the third highest weighting. Uber is in there. Boeing, Union Pacific itself, the railroads should be in transportation. So there's some double counting in here. Keep that in mind. Eaton Corp, electrical equipment manufacturer, John Deere, etc. Lockheed Martin on the list, General Dynamics, etc. So this is telling you the industrials, the American manufacturing, it's keying off. And this is kind of like, if you go back on everything Cameron and I have been saying for a year plus of doing this now, this is what we're talking about. This is what the Trump administration wants to see. This is literally run it hot, as Scott
Right.
Bessent said in that quote, like last May, June. All right. How do you know it's for real, though? How do you know it's not just a bunch of overproduction and throwing good money after bad? What you would see is the goods moving from your transportation companies. They're filled up with orders from an ultimate buyer of the output that your manufacturers are spinning out. So we look at this chart. The transportations, they're generally going to lag the industrial pickup because moving the good from A to B comes after the production of the good at A itself, right? So you'll first see the spin up in activity in industrials, then the transportation follows through. All right. So if you look, this chart I pulled back going to 7 years. You see the COVID low in 2020, March 2020. Remember what we did here? We juiced the crap out of the old system, right? We tried, like, when the old framework, the post Nixon offshore dollar standard, all of that, when that thing went into its full on heart attack, we got out the paddles, ambulance came in, we printed, I think the Fed monetized $6 trillion on over $6 trillion onto its own balance sheet and monetary stimulus. Fiscal came in with like another six with CARES Act, Inflation Reduction Act, et cetera. We juiced it. That pulled the thing up, that fiscal and monetary expansion, but it topped out. It was fool's gold. November 2nd of 2021, really the same, it's the same date that Bitcoin, or very close to it, tops out for the last cycle. I know Cameron and I were very focused on Bitcoin. It's right there as well. Um, you get the fool's gold basically just selling when transportation tried to break out and say, yeah, this industrial, I guess just this new policy and Inflation Reduction Act, all of that was trickling in. The market said no, that's not for real. And so the transportation sold off. They basically spent 2022 through 2024 going sideways in consolidation. Nothing was working. So all of the Biden administration policy, all right, that basically the market was voting. When you look at the transportation sector from the U.S. framework, that wasn't going to work. So we have the election, new policy comes in, definitely something different, not the same as the old, in my opinion. Um, you see the bottoming heading in to Liberation Day, same way as the industrials. But since then, the transportations have been on an uptrend and they're now breaking out, right? So those 2 points, those yellow circles I annotated on the chart. That first one is that same one where the market rolls over, same coordination as Bitcoin. It's like, yeah, this is not for real. Um, you get another breakout attempt in November with the election itself. In my opinion, that's the market getting ahead of itself. It's seeing that election result and saying this is going to be big. But it's kind of that thing where things are bigger. The changes are a technology, this fits into as well. It's always bigger than you think it is, but the most eager just rush into the trend right away, not realizing, hey, this is actually going to take a lot of time. So that false breakout got sold. But now, in the last month or two, you know, coming on the back of the Argentina situation, coming on the back of, there was a Chile election result, everything going on in South America, coordinating around the sphere of influence in the US, you're seeing that breakout in the transportation names. So if you go into these, it'll be your railroads. You mentioned UNP. I was going through the list. It's in the industrials. It probably shouldn't be. So there was some double counting there. But you've got the railroads in this index. You've got the trucking companies, JB Hunt, PACCAR, et cetera. You've got the airlines. That's how stuff moves. Like physical goods moves from A to B. Those are giving you the market signal that the breakout is underway. Now you look at the Dow theory, it says, oh, if you see transportation showing the same bullish trend, giving the confirmation signal to the breakout you're seeing in industrials, that's looking like a bull market. And the more you see, I think the transportation breakout realize itself from here, because it's still within the range of those two prior attempts, if you will.
Right.
But the further this goes from here, the bulls will come in and bid this, and that will be the signal that the domestic U.S. economy is kind of reaccelerating. This policy is having its intended impact, but this is on the net. When you heard Scott Bessent go around the circuit and say, we're going to run it hot, this is it. Like, this is what's happening. So I don't, Cameron, any questions
No, I
there?
thought that
But
was a
this is
really
kind of
good
Dow
framework.
theory in a nutshell in 2025.
Yeah, I think for me, when you brought up Dow Theory, I was doing some searches because for viewers, Matt is obviously the investment head, and I'm really the one following what he's kind of explaining. So for me, that was a really interesting framework, and seeing it play out like this, I think that's further evidence, right? So very very interesting one.
All right, cool.
So let's
Uh,
finalize out
well,
today's episode with some quick hits here. We've got several kind of things to look forward to, or maybe not look forward to, but look to the future for. um, but Matt, you put this one up here. Supreme Court ruling in favor of Trump's tariffs. There's a lot of back and forth on what's going to happen here. What are your thoughts here?
Yeah, so the administration, if you see it, like we talked about the just kind of flawless execution, like shocking level of competency for what was just accomplished Friday night, Saturday morning with the Maduro extraction. Probably some cooperation to make it go off that successful, but at the end of the day, look at the output. Um, that's the story, right? So these wins that the administration is racking up, someone else is the loser, right? So if you go into the regional spheres, access to resources, who has financial oversight, or what we say, like just enveloping within the financial sphere of those resources, someone's losing, so there has to be some pushback.
Right.
So I won't get deep into this, but you're kind of seeing this in the US. Where is the push and pull? For every action, there's maybe not an equal, but an opposite reaction in this big geopolitical uh, chess game. And so if you're looking for where are those pushbacks going to come from, number one, I'd say look for the Supreme Court ruling possibly as soon as tomorrow. So this is Thursday, January 8th when we're recording. Could come tomorrow. It is, you know, what would you call it? Just a unlikely, I'd say. What would you call it? Just a 3-1 underdog. That's what I was looking for. That the Supreme Court rules in favor of Trump's what's the old ruling? I forget the Economic Act, the Emergency
Oh, yeah.
Act. That it's like IEEPA, I think is the term. Um, that these tariffs were that initially citing um, as justification to implement these policies, right? So I think a lower court ruled against the Trump administration. Supreme Court may rule on it Friday. But right now, as of just polymarket odds, there's a 24% chance that the Supreme Court will come out and in favor of this administration. So there will be a speed bump. There will be a setback. Scott Bessent has already mentioned, oh, there's other acts. There's 2 or 3 other options they have to go to, even without full congressional authority um, to actually hard implement these policies. They're just forward looking. We have the midterms at this point right around the corner. What we're seeing here, a hot U.S. economy. We're seeing other policies come out like we don't have a slide on this, but Trump came out yesterday and said, "Hey, we're going to issue a ban on institutional investors buying
Single family homes.
the housing
Yeah.
stock in the American economy." Voters are going to love this. Like they want lower house prices. Well, some don't. If you're sitting on your house, if you're a homeowner, it's not may not be popular. But if you're young, you're a Gen Z or millennial who's just frustrated and depressed because you can't afford a house, you love these
Right.
policies, right? So this will become, part of the platform headed into the midterm. There's going to be big shifts coming into place. Pointed there why I said that. If if this administration had a Congress that would pass a bill to implement these tariffs and just give it like there wouldn't be this Supreme Court issue, this Congress would do it. It tells you that this administration, Donald Trump, a Republican president, doesn't actually have an impactful majority in the House or the Senate to get this policy through. So he does have a strong message, in my opinion, to go out, impel people or implore people, voters, to show up and vote in an off cycle midterm election to send him a Congress that will basically just make it official, not rubber stamp the policies. So this will be a big midterm year, in my opinion, and we're not even close to the I'd say the fever pitch of a big election in the U.S. that all of us know, most of us know what it feels like. Um, so if you also look, I'm just diving deep here. Like I like to do this, maybe too much. We're running time, so we want to keep this episode short. But Kalshi shows the expected, basically just vote whip of the 9 Supreme Court justices. The only way this administration is going to get to a 5 vote or more majority, there's an inside straight here. You either get 5 votes or six. You're not getting seven, eight, or nine. What that implies is there's at least three hard no's. I'll tell you who those are in a second. The modal outcome is three yay votes, which is 41%, which means there's also three hard yeses behind this administration. I'll also tell you who those three are in a second. And then you've got three maybes who are gettable. What does it come down to there? This is all going to be decided. Basically, the Trump administration needs to sway two of the three justices in this opinion, basically to not throw up a speed bump. This will not be the end of the road for tariffs. We are going to continue hearing about the tariff story between now and whenever the cows come home. But for this phase in the battle, if you will, tomorrow or possibly later, that ruling will be market moving. All right, so you've got three no's. You've got Judge Sotomayor, Judge Elena Kagan on the right, Judge Brown Jackson. Those are your three definite no's. Obama appointees and Biden era appointees. You've got three hard yeses. You've got Alito, third from right. You've got Judge Kavanaugh, fourth from right. Everybody remembers his congressional hearings, right? Those were I guess just what we'd say the most theatrical we've ever seen out
There's
of
a
any of
lot
these.
going on in that
And
one.
then you've
Yeah.
got, yeah, that was fun times, right? I like beer. Um, and then Clarence Thomas, this is a 1990s era, early 90s. He's been on the court for 30 years, but those are your three hard yeses. And then your three in the middle, we don't know which ways these goes. Chief Justice John Roberts in the middle. You got Neil Gorsuch, fourth from right, and then Amy Coney Barrett, fourth from left for Gorsuch, and then second from right, Amy Coney Barrett. They're basically going to go through the constitutionality, figure out what the heck is going on here. Does the administration have the ability to do this under the specific authorities granted under IEPA that they cited for these actions? And we'll find out, right? If there's kind of a stick in the bike wheel starting tomorrow in terms of basically everything that's been put together on this new kind of monetary and economic framework that we've been talking about for 12 months. Um, in my opinion, the momentum's already there. We've already left behind the old world. The entropy is built up. It's already a system on it that was on its last legs, and that was in 2008. But LIBOR is dead. All the infrastructure is dead. We've replaced it. There's only one direction this is going in the long term, but this could throw some mud in the gears for the short term. So we're talking about there's parties that want to see that. This is one way that hiccup could come through for the administration. Now, other things besides the tariffs ruling, you're looking at this whole immigration. Yesterday there was a situation in Minneapolis in combination with a lot of situations going on in Minneapolis, it seems, over the last 2 to 3 weeks. But you've got a lot of civil unrest starting with Minneapolis, or emanating from Minneapolis as a hotbed. I'd say watch for that. Mass protest, people who want to foment that civil unrest inside the United States. Watch for that to pick up. And then Cameron, you called out here what's going on. You're starting to hear trickles of something going on with Greenland. But all in all, what I would watch for, what's it really all about? It's the financial systems of these regional spheres. And if you want to look somewhere to watch, I've been talking about this for a while. Look at the France euro denominated, the OATS yields. So you're looking at a chart here. The market is saying French debt wants to break out, like yields want to go higher. You're looking at this, you call it a rising triangle or ascending triangle for people who like technical analysis. You can basically see it there, right? I've kind of outlined it in red. Put that other vertical leg on, and you see that triangle forming. This is the market saying, hey, we want to sell off, yields go higher, but someone keeps coming in to defend a level right about 3.5%. What that's telling you is there's likely someone, some large institution, maybe it's France itself, maybe it's the ECB, et cetera, that wants to defend that level for very particular reasons, right? So this could, from, you saw charts earlier where you get into a long-term overall consolidation. Let's say one side of this trade, the bears who want to keep yields lower, defend that 3.5% level, it's getting to a point where it has to break one way or the other. Yields either need to go higher or lower. Um, the bears, they would love to see it break lower. Then you get into a longer term consolidation. But so far, at least what we've seen for the last 24 months, um, what the market broadly is telling you what it wants to do is it wants to see yields go higher for French government borrowing rates, which is, I think, right now where that battle line is drawn. So sometime, and I mean, you see this thing conclude like narrowing in towards an outcome one way or the other. We're going to find out here pretty soon. So if not weeks, maybe a month or two. So we'll continue to watch for that. But once you see yields break through that horizontal level, what that's going to tell you is other capital, other traders, they're going to see that and they're going to pile on in terms of shorting or not showing up, let's say, to French sovereign debt auctions. So once they lose that level, expect a large and meaningful move to happen, and you'll see it reflected in headlines out of Europe, in particular France, government itself. We talked about the budget problems last year, the
Protests and all of that. Yep.
uh, PM resignation, replacement, et cetera. Um, but you're also looking at an ECB headed by Christine Lagarde, who is of French nationality. So just the activity out of the EU, I would look at France as your um, um, just kind of your anchor here in the coming days and weeks. So we'll leave it at that. I think that's a good episode to open up 2026, what to watch for. But if this first week in January was anything of a signal. This is like the first act. I'm thinking of movies in my childhood, right? If anybody's seen The Matrix,
Yeah.
you start off with this scene and it's just like, what was that, right? And then you're just in, like, for one of possibly the best movies of the last 20 or 30 years, right? It's kind of how we started out 2026. This is going to be a big year. So get your bearings. Everybody is just, in the volatility, losing their wits. Try to stay grounded, stick to your framework, and don't get caught up in the whirlwind. And we'll do our best to help you avoid falling into that. All
Yeah.
right. So Cameron, I'll leave it to you to do the
Yeah.
sign off. But cheers to 2026 and our new headline, the Mind Print Hash.
Absolutely. Well, again, thank you everybody for watching. This was another episode of Now Mind Print Hash. As always, please like, subscribe, and follow us on Twitter. Follow us on LinkedIn. We will likely be, I want to say, hopefully, posting this from a new Twitter handle as well. I'm not going to put it into the video just to make sure we actually get it done, but if not, I guarantee you next week we'll have that going. And you'll see it on all of our normal channels, and I'll make sure Matt and I both retweet and like that post so you can see it as well. All right, well, have a good week, everybody.